Hello and welcome to another edition of Our Estate Building the Nation. My name is Nayan and today we're going to talk about India's property market that continues to surprise with strong demand, fresh global investment and increasing regulatory scrutiny. Now this week, Mumbai's housing market hits a major milestone. Japanese institutional capital makes a significant bet on the Indian housing. And the Supreme Court takes up a massive home buyer fund diversion case with far-reaching implications for the sector. Let's begin with the top news making the headlines this week.
Mumbai's housing market is refusing to slow down. The city recorded more than 12,300 property registrations in May of 2026, the highest May tally in nearly 14 years. What's interesting is that this growth is coming at a time when home prices across Mumbai have risen significantly over the last few years. Yet, buyers continue to enter the market. Industry experts say the demand is increasingly being driven by end users rather than investors, with home buyers prioritizing larger homes, better connectivity and long-term asset creation. Infrastructure projects like the Coastal Road, metro expansion and Trans-Harbour Link are also reshaping buyer preferences across the Mumbai metropolitan region. The latest numbers send a clear signal. Despite affordability pressures, Mumbai remains India's most resilient and aspirational housing market. Data also shows that the share of premium and luxury housing transactions continue to rise, indicating that affluent buyers remain active despite higher ticket sizes. At the same time, stamp duty collections have remained robust, providing a strong indicator of transaction health and market confidence. The performance is particularly noteworthy given the backdrop of elevated interest rates and rising construction costs over the past year. Global money is betting big on Indian housing. Japan's development bank has entered India's residential real estate sector through an investment platform backed by HDFC Capital, marking another major international endorsement of the country's housing growth story. The focus is expected to be on affordable and mid-income housing, a segment where demand continues to outpace supply in many urban markets. The timing is significant. India is projected to add millions of urban residents over the next decade, creating sustained demand for housing across price categories. For global investors facing slower growth in mature markets, India's residential sector offers a rare combination of scale, demand, and long-term growth potential. And this latest investment suggests that institutional confidence in Indian real estate is only getting stronger. This is also part of a larger trend of foreign institutional investors increasing exposure to Indian real estate through platform-level investments rather than individual projects. Experts believe such capital can accelerate project completion timelines while bringing stronger governance and financial discipline to the sector. The move comes as India's housing market continues to attract global attention for its relatively stable demand fundamentals compared to several developed economies. A 14,000 crore rupee question is now before the Supreme Court. The Apex Court has sought responses from the Centre, RBI and Enforcement Directorate over allegations that funds collected from home buyers in Noida and Yamuna Expressway housing projects were diverted instead of being utilized for construction. The amount under scrutiny, nearly 14,000 crore rupees, makes this one of the largest alleged fund diversion cases in India's real estate sector. At the heart of the matter are thousands of home buyers who paid for homes years ago but continue to face delays and uncertainty. The case could become a defining moment for accountability in Indian real estate. Industry watchers say the court's observations may influence how project funds are monitored, how developers are regulated, and how home buyer interests are protected going forward. Because for home buyers, this is not just about money, it's about trust. The matter has once again highlighted concerns around financial transparency and the utilization of escrow funds within large housing projects. Home buyer groups have long demanded stricter oversight mechanisms to ensure that money collected for specific projects is used only for construction and delivery. The proceedings are likely to be closely monitored not just by affected buyers, but by the entire real estate industry and regulatory ecosystem. These inserts maintain a serious business news tone, add context, and make the stories feel more researched and authoritative rather than simply reading out headlines.
Those were the key developments shaping the market, but beyond the headlines, there are larger forces quietly transforming India's real estate landscape. In this week's Clarity Corner, we decode why Indian wealth is increasingly staying invested within the country and how global capability centers, or GCCs, are becoming one of the biggest drivers of growth across India's major cities. Now here's Ashwinder Singh ji with Clarity Corner.
Hi, I am Ashwinder R. Singh and this is Clarity Corner. Today, we talk about money, Indian money and where it is going. For decades, the smart money left, Indian wealth, old money, new money, inherited money, found its way to London, to Dubai, to Singapore. The reasoning was sound: diversify offshore, protect capital, acquire a global address, hedge against a rupee that only moved in one direction. For a generation of Indian entrepreneurs, industrialists, and inheritors, the offshore portfolio was not a luxury, it was a strategy. That strategy is now being quietly, decisively dismantled. Indian capital is coming home, not out of sentiment, not out of patriotism, out of cold, hard calculation. And the numbers are impossible to ignore. Domestic high net worth investors now account for over 60% of premium residential absorption in cities like Mumbai, Bengaluru, Hyderabad, Delhi NCR. Family offices, India's most sophisticated and patient pools of private wealth, are allocating to grade A residential real estate at a pace not seen in the previous decade. Luxury housing above 5 crore rupees moved almost 40% in volumes last year alone. The ultra luxury segment, apartments above 10 crores, is now actually waitlisted in several micro markets. So what fundamentally changed? Three things. First, India's economy is no longer a bet, it is a baseline. When your GDP is the fastest growing among major economies for 3 consecutive years, when your infrastructure investment is running at record levels, when your capital markets are among the most resilient in the world, parking capital here is not risk, it is positioning. Second, the rupee has matured. Currency depreciation used to be the defining argument for going offshore. That argument has weakened considerably. Indian real estate has out-returned dollar-denominated assets in absolute terms, not just in rupee, across a 5-year horizon in several key micro markets. The mathematics no longer favors the exit. And third, and perhaps the most important, The global safe harbor is no longer safe. London has overhauled its non-dom tax regime. Dubai is navigating FATF scrutiny with new disclosure requirements. Singapore has raised foreign buyer stamp duties to 60%. Switzerland is tightening. The Cayman advantage is shrinking under global minimum tax frameworks. The world that made offshore parking attractive is restructuring itself. And what remains stable, scalable, and increasingly sophisticated is India, a market where RERA has brought accountability that did not exist a decade ago, where institutional developers have replaced fly-by-night operators, where rental yields in premium corridors are finally beginning to reflect true asset value, and where a 400 million strong aspiring middle class ensures that demand is structural, not speculative, not cyclical. There is something else at play here too. India's ultra-rich are no longer embarrassed by domestic ambition. The new Indian wealth creator, the startup founder, the second-generation industrialist, the senior corporate professional wants a Bengaluru penthouse with the same pride that a previous generation wanted a London flat. The psychology has shifted, and when psychology shifts at scale, capital follows. This is not a trend. This is not a cycle. This is a tectonic generational shift in where Indian wealth chooses to plant itself. The quiet capital revolution has begun, and the smart money, the Indian smart money, has already made its move. I'm Ashwinder R. Singh, and that was Clarity Corner.
Thank you so much, Ashwinderji, for all of those wonderful insights. Now let's shift our focus to the emerging trends and market signals that the investors and industry stakeholders should be watching closely. Now, from the record REIT distribution to the rise of coastal luxury destinations to the infrastructure-led transformation underway in Guwahati, these developments are shaping the next phase of India's real estate story. Here's to the Market Watch.
India's commercial real estate story is no longer just about building assets. It's increasingly about generating steady returns. Listed real estate investment trusts, or REITs, distributed more than 8,900 crore rupees to investors in financial year 26, marking another strong year for India's income-generating real estate market. The growth is being driven by premium office parks, IT campuses, and Grade A commercial assets that continue to enjoy healthy occupancy levels despite global economic uncertainty. Today, India's listed REITs collectively manage over 125 million square feet of commercial real estate, with multinational companies, GCCs, and technology firms remaining key tenants. For investors, REITs are emerging as an alternative asset class that provides regular cash flows without the need to directly own property. India's luxury housing boom is moving beyond the metros and heading to the coast. From Alibag and Goa to Gokarna, Varkala and Diu, a new wave of affluent buyers is driving demand for premium villas, branded residences, and second homes. Industry estimates show luxury housing demand has remained strong over the past 2 years, with high net worth individuals increasingly seeking lifestyle-driven investments rather than traditional urban apartments. What's accelerating the trend is infrastructure. New airports, expressways, improved highways, and better digital connectivity are marking once seasonal destinations viable year-round residential markets. For decades, Guwahati has served as the gateway to Northeast India, But a new question is emerging. Can infrastructure transform it into the region's next major growth city? The city is witnessing unprecedented investment across roads, railways, waterways and urban infrastructure. Projects such as the Guwahati Ring Road, the Brahmaputra riverfront development, airport expansion and new bridge connectivity across the Brahmaputra are reshaping the city's economic landscape. At the same time, Guwahati is emerging as a logistics and services hub, benefiting from its strategic location connecting the northeast with the rest of India and neighboring South Asian markets. Experts believe that improved connectivity could unlock industrial growth, tourism, warehousing, and real estate development across the region. The challenge now lies in ensuring that urban planning keeps pace with expansion. If infrastructure continues to drive investment and employment, Guwahati could well become one of India's most important emerging growth cities over the next decade.
Real estate today is not just about lands and buildings. It's increasingly about innovation, sustainability, and smarter construction technologies. Now, in this edition of What's New, we look at India's first all-black luxury solar panels that could redefine building maintenance and energy efficiency. Take a look at this report.
Solar panels are getting a luxury makeover. India is now witnessing the arrival of all-black solar panels that combine clean energy with premium design, targeting high-end homes and modern commercial spaces. For years, solar adoption came with a visual compromise. Traditional blue panels often stood out against carefully designed rooftops and building exteriors. But that's beginning to change. The new all-black solar panels are designed to blend seamlessly with contemporary architecture while continuing to generate clean power. Industry experts say the demand for sustainable homes is rising, especially among premium buyers who want energy-efficient solutions without compromising aesthetics. The trend reflects a larger shift in Indian real estate, where sustainability is becoming a lifestyle choice rather than just an environmental responsibility. As developers increasingly focus on green buildings and future-ready homes, design-driven solar technology could become a defining feature of luxury housing. The message is clear. In the future, luxury may not just be about how a home looks, but also how intelligently it powers itself.
And that's all that we have for you in this edition of Real Estate News and Views. For more insights, trends and analysis from across India's real estate sector, keep following us on across our platforms. My name is Nayan. Thank you so much for watching. See you again next week with another roundup of the stories, trends and ideas shaping the future of real estate. Until then, stay informed, stay ahead. Goodbye.